Hello and welcome to another session of the My Solo 401k Financial Daily Webinar Series. Thank you so much for joining. Please chat over questions or topics you wish to discuss. Today, we're going to start out with some prepared content, specifically the Solo 401k deadline to open and fund accounts for a business that is taxed as a C corporation, including an LLC taxed as a C corporation. As always, you can join us on our community, mysolo401k.net/mycommunity, where we have daily live webinars starting at 1 p.m. Pacific, 4 p.m. Eastern. Those are typically Monday to Thursday. And on Fridays, we typically go to YouTube, such as tomorrow will be on YouTube. So you can check us out on YouTube. If you just search for My Solo 401k Financial on YouTube, you'll easily find our channel. We've got all the history of videos. They're all publicly available. As well, on the community, there's forums where you can post questions 24/7, as well as a library of videos and webinars. So there's a lot of great ways to learn and to share the knowledge. All right, so the presentation is being provided for educational purposes only, including that it's not to be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. Let's first start out with some foundational concepts, including Solo 401k eligibility. So a Solo 401k is for an owner-only business with no full-time W-2 employees. So think like an independent contractor, maybe solo practicing professional, like attorney or CPA. Again, with no full-time, non-owner, non-spouse employees. So as we'll note on the next slide, spouses can participate as long as they're working in the business and reporting their own self-employment income. Some of the top eligibility considerations will include whether or not a separate formal legal entity is needed to be eligible to set up a Solo 401k. And the answer is no. You don't need to have a formal legal entity. Now, of course, with the focus here being C corporations, that's going to be an LLC or a corporation taxed as a C corporation. And that would be the entity that would sponsor the plan. And so the key is that the self-employed individual is receiving earned self-employment income from that entity. In the case of a C corporation, that would be W-2 wages. So there's no minimum amount of earned self-employment income that is needed to be eligible to set up a plan. But if the goal is to be able to make contributions, you can't save more than you earn, so you're not going to be able to save more than your W-2 wages, for example, if your business is taxed as a C-corp. As mentioned, your spouse or even business partner may participate in the plan as long as they're receiving their own earned self-employment income, such as their own W-2, in the case of a business taxed as a C corporation. You can set up a Solo 401k, even if you have a W-2 job, a day job, right, through a different employer that you don't own, as long as you are reporting separate earned self-employment income for your self-employed business, even if you're participating in your day job plan. Now let's understand how clients are using our plan, and we'll look at it through the lens of different customer profiles, starting out with the frugal investor. So setting up our plan will make the self-employed business eligible to claim $1,500 in Solo 401k tax credits. That's $500 per year for 3 consecutive years, for a total of $1,500, which is going to more than cover the cost to set up and maintain the plan for the first 7 years, because our fees are $650, which includes the $525 establishment fee, plus the first $125 annual fee. Another great use case is the Roth Maximizer. So with our plan, the self-employed individual may be able to contribute up to $69,000 or even $76,500 if they're 50 or older as Roth or Mega Backdoor Roth Solo 401k contributions. Moreover, our plan is going to allow the self-employed individual to convert pre-tax money to Roth money. So this could be pre-tax money that's already in, say, an IRA or a former employer plan that they roll over to the Solo 401k. And then the plan is going to allow for in-plan Roth conversions. Of course, that's going to be taxable as well as reportable. and we handle the required 1099-R to report it as an optional free service for our customers. But then going forward, they have the potential for tax-free growth. Another great use case is the large account holder. So with our plan, we handle the Form 5500 EZ, which is an informational tax filing requirement that applies once the value of the plan exceeds $250,000. So we handle that as an optional free service. In other words, no additional charge. Moreover, we do it under the electronic filing system, the EFAS system, to make it easy for the client. Another great use case would be the alternative investor, because our plan not only allows for traditional brokerage type investments, such as stocks, bonds, mutual funds, as well as true alternative investments like real estate, private placement, private stock, crypto, precious metals, notes. Finally, the rainy day investor. So with our plan, you can borrow up to 50% of the balance not to exceed $50,000. And that's not going to be subject to taxes or penalties as long as it's properly documented as a solo 401k loan within those solo 401k terms and paid back according to the payment schedule. So we handle the solo 401k loan documents as an optional free service for our clients. We would prepare those within 1 business day when a client requests it. As far as those terms, again, the individual is going to be able to borrow up to 50% of the balance, not to exceed $50,000. It would need to be paid back in monthly or quarterly payments, equal payments of principal and interest. The interest is going to be prime plus 1%, or it could be a CD rate plus 2%, with those payments spread over a 5-year term. So now let's turn to the solo 401k setup deadline as well as contribution deadline. This is a great slide as it brings it all together for a business that is taxed as a C-corp or an LLC taxed as a C-corp. So in order to preserve the maximum amount of contribution types that you can make for the maximum amount of time, you want to sign up for our plan by the end of the year, by December 31st, 2024. Which will preserve the ability to make 2024 contributions, all types, whether employee, pre-tax and Roth, employer, pre-tax and or Roth, as well as voluntary after-tax, which is how one makes Mega Backdoor Roth contributions. So the individual who signs up by the end of the year is going to preserve the ability to make all types of solo 401k contributions for 2024, all the way up until their business tax return deadline, including any timely filed extension. So for a business that is taxed as a C corporation, the 2024 deadline is going to be April 15th or October 15th if they file a timely extension for their business tax return of next year. Now, if they don't sign up and set up the plan until after the end of the year, they could still set up a plan next year, but they wouldn't be able to make as many contribution types. Specifically, they wouldn't be able to make the employee contributions. So they could still make employer and or voluntary after-tax contributions next year, as long as they set up the plan either by April 15th, or if they file a timely extension by October 15th. So in other words, they'd have to set up the plan in time to make those employer and or voluntary after-tax contributions by their business tax return deadline, including any timely filed extension next year. So there's a big advantage with setting up the plan by the end of the year. And we make it very easy to do that, because in order to set up the plan, all that you need to do is sign the documents. And we create the documents within the same business day. So step 1, the individual completes our quick 1-minute online application, which is just 10 simple questions. That gives us the information we need to draft the documents, which we do within the same day. Then we send them an email with a link to our secure portal where they're able to access those pre-filled documents that were drafted specifically for their business. They simply download, sign, and then upload. And they don't even need to upload by the end of the year. They just really need to sign it to meet the deadline. And then that will give them time to open up accounts and make contributions next year. So signing up with us is how you set up the plan, right? Because a 401k plan is a legal entity. So like any legal entity, it's the documents that create it. And again, we create those documents within the same business day. So if they set up and sign by the end of the year, that'll lock in the ability to make all types of contributions for 2024 up until their business tax return deadline, including any timely filed extension next year, as well as opening up accounts. This would include pre-tax, Roth, voluntary after tax. So to dig into those steps, step one, again, is just to complete the online application. This is where we collect the information, right, about your name, your email, the name of your business, right, the C-corp, your address, the name of the plan, which is just 2 words in the word trust. We then draft the documents, and then we send you an email with a link to our secure portal where you're able to access those documents, right? You can just simply download, sign, and you've met the deadline. You can use electronic signature software to sign the documents, or of course you can print them off, maybe print the signature pages off, sign it with a pen, take a picture, right? And then when you're ready to open up the accounts, in that same email, there's going to be an upload link where you can return those completed and signed establishment documents. So you could either do that now or even next year, because once you've signed those documents, you've met the deadline. So you can take your time to open up accounts and make contributions in 2025. But yes, once you're ready, you would proceed with the next steps, which would be returning the completed and signed pages. Again, there's an upload link in the same initial email. And then there's going to be a third link in that email where you can go on our website and let us know where you want to have the accounts at. So we've helped clients open up accounts at hundreds of different banks, different brokerages. So we have an online form where you choose where you want to open up the accounts, right? You may say, okay, I want to open up the accounts at Fidelity or Schwab. If you choose Schwab, right, that'll prompt us to prepare the paperwork to open up free brokerage accounts at Schwab, right? Another email goes out with a link to our secure portal where you can access the pre-filled documents to open up the accounts at Schwab. You just return back the signed pages. Then we review and compile so the paperwork can be submitted to Schwab. And then Schwab, we can fax it to their back office, and then Schwab will send you an email once the accounts are open. Once the accounts are open, then you can start making contributions. And we're fielding questions every day from our customers, for example, in terms of how much they can contribute and the mechanics, right? So in terms of some of the top solo 401k setup deadline questions, a popular one is whether or not I need to obtain an employer identification number by the end of the year. So number one, you don't need to have technically an EIN number for your business to set up the plan, right? For example, many of our customers are sole proprietors and they may not have an EIN for their sole proprietorship. They may be operating under their social security number. But of course, if you have a C-corp, you probably do have an EIN number, but we don't need the EIN number for your business. An EIN number will be needed to be obtained for the 401k, right? That's the IRS expectation, that a separate tax identification number is obtained for the 401k. And that EIN number will be used to open up the accounts. But again, in terms of the deadline, that EIN number doesn't need to be obtained by the end of the year. It just needs to be obtained once you're ready to open up the accounts. So once we receive those completed and signed pages of the establishment documents, as well as your response to the next steps questionnaire directing us to prepare paperwork to open up the accounts at the bank or brokerage of choice, at that point, we would obtain the EIN number for the plan from the IRS, and then that EIN number would be used to open up the accounts. For example, it would be listed on the Schwab application that I mentioned up above. Do I have to open the solo 401k accounts by the end of the year? No, as we've made clear through this conversation, to meet the December 31st deadline, all you need to do is set up the plan. And the way that you set up the plan is by signing up with us, because that's what prompts us to generate the documents that are needed to create the plan. That's what creates the plan. It's not the accounts, it's the documents. Do I have to make both employee and employer contributions by the end of the year? No, you don't. All you need to do is sign up so that we can create the documents, so you can create the plan. And then when you're ready to open up the accounts, which could be next year, you can return the documents. You can let us know where you want to have the accounts. So this concept that you have until your business tax return deadline, including any timely filed extension for a plan that was set up by the end of the year, is specific to self-employed businesses. So we have an excerpt here from IRS publication 560, which is the landmark guidance for retirement plans for self-employed businesses like a solo 401k. where they make crystal clear that as long as the plan is set up by the end of the year, that'll preserve the ability to make all types of contributions. A 401k plan is a defined contribution plan. That's why we've got that row highlighted. So elective deferrals, which is another word for employee contributions, as well as employer contributions, could be made until the due date of the employer's return, including extensions. And from a policy perspective, this makes sense because a lot of times self-employed individuals may not know exactly what their income is until after the end of the year, right? They might have a seasonal business where they're not exactly sure how much they're going to make until after December 31st. And that'll give them time to determine how much they've made and then how much they are therefore eligible to contribute. And then from there, they can decide, okay, how much do they want to save, right? Which within their budget. So if I adopt the plan in December of 2024, how can I make contributions based on income that I earned in January of 2024? That's a great question. And it's a common question because there's many, many folks who are signing up for solo 401k plans at the end of the year who are trying to meet the deadline. So the industry best practice is for the plan to be effective as of the beginning of the year. So January 1, 2024. So as a result, the individual is going to be able to make contributions based on all the income all the self-employment income that they earned and reported for 2024. So in the case of a C-corp, right, all the W-2 wages that they might have earned and reported on that 2024 W-2, they could use that to justify contributions to the plan. My CPA tax advisor is informing me that the employee contributions must be made by December 31st. Are you sure that I can make this contribution in 2025? Well, we're absolutely sure, right? And we have the citation of IRS publication 560 to help demonstrate that that is certainly the case. And we explain why that is, right? So a lot of CPAs and tax advisors might be coming from the perspective of a full-time employer plan, such as a 401k plan that one might have at a day job, where it is true that the employees need to make contributions by the end of the year. But for a self-employed business, you have more time, right? And the reason being, the policy reason would be a lot of self-employed individuals don't know exactly how much they made until after the end of the year. And the good reference for that is IRS publication 560, which again is the landmark guidance for self-employed retirement plans such as solo 401ks. This chart here is a great chart as it shows how the contribution deadline is really driven by the business tax return deadline, right? So if you're an S-corp, it's going to be the S-corp deadline, March 17th or September 15th if you filed a timely extension. Whereas for a C-corp, again, it's April 15th or October 15th if you filed a timely extension. You know, assuming again that you sign up by the end of the year. That's the key deadline to keep in mind. So that takes us to the end of the slides we wanted to bring and share. Thank you so much for the good participation. I see all the good questions here. So let's start to go through those good questions. Okay. I currently have more than $250,000 in my SEP IRA. I'm in the process of transferring these funds into my newly created solo 401k with your company. Do I need to request a Form 5500EZ for 2024? So what action steps do I need to obtain a 5500EZ for 2024? Do I notify your company, and when will you generate this tax form? When should I expect to receive the form? Excellent question. So and that's a great question. It highlights that, yes, we do prepare the Form 5500EZ as an optional free service for our customers. Now, they have to let us know once the value of the plan exceeds $250,000 so that we can add it to our queue to prepare the 5500EZ. So in your case, you certainly would, because you're rolling over more than $250,000 from your SEP IRA. So you could go ahead and just fill out that online questionnaire. I just linked to it there. And so the 5500EZ for 2024 is going to be due in July of next year. So we start to follow up with the clients in the spring. We have a lot of the information in our records, of course, to prepare that 5500EZ. We prepare it in the eFast system. Now, we don't have all the information, right? Like the financial information such as the value at the end of the year. So that's where we would follow up in the spring to gather that information, and then we would fill out the rest of the 5500 EZ. We would assign it to you for signature. It would come back to us in the EFAS system so that we could submit it through the EFAS system and then send a courtesy copy to the client. Great question. Thank you so much for bringing it. All right. So if you could please send an email to support@mysolo401k.net and include just a quick description and the name of your plan in the subject line, that would be super helpful. And then we can follow up with you regarding the funding options. Thank you for your good question. Regarding a Rob's 401k, can I use a Roth IRA to fund the C-corp? Well, you cannot transfer a Roth IRA to any type of 401k, including a Rob's 401k. Of course, that's not going to stop you from taking a distribution from the Roth IRA just into your personal account, and then you could then invest the money into the C-corp. That investment would need to be structured as an additional stock purchase by you personally. If I created a traditional 401k to open a 401k finance business, can I create a Roth 401k within the corporation for myself as an employee? Yes, the Rob's 401k plan would allow for Roth 401k contributions. So if you're making 401k contributions, you're going to want to reach out to us so we can help let you know about the options, just give you information about contributions. For example, typically the individual would want to upgrade the plan to a safe harbor plan, which we can handle that, help you open up an account for the Roth 401k contributions, etc. But yes, to answer the question, it can be done. So I see my LLC is an investment company taxed as an S corporation. As the owners, my spouse and I do the research on financial market, analyze the data, manage the brokerage account and crypto investment under the LLC name, file tax and communicate with the regulators. The profit is from the investment, but we do provide services for making the investment income. I want to double check if my LLC can open the solo 401k. Well, you need to have, in order to be eligible to have a solo 401k, you need to be reporting at least some type of earned self-employment compensation. So in the case of a business tax as an S corp, the way to demonstrate that would be to receive W-2 wages from the S corp. Now, in terms of eligibility, there's really technically no minimum amount of earned self-employment income. So even if it was just say a few $1,000s, right? As long as it's legitimate, you'd want to work with your tax advisor to have that W-2 wages reported. And that's going to help document and demonstrate that you are self-employed and therefore eligible to set up a solo 401k. Thank you so much for the good questions. We appreciate the participation. Tomorrow's schedule is to be on YouTube. It should be at 2:30 Eastern. So if you go to our YouTube channel and you subscribe, you'll get notifications. That's a great way to get notifications. Is a sole prop eligible for the $500 credit for 2024 to offset your setup costs? No employees, just one owner, solo 401k, and planning to do a Mega Roth with you. So if you're signing up now, right, all the new plans, whether you're converting a plan from an existing, a basic plan, say to discount brokerage, or you're setting up a brand new plan with us, is automatically going to be drafted to include the automatic contribution feature, the notices, the other documents that are required to make the self-employed individual eligible to claim the credit. So if the plan is set up in 2024, the self-employed individual is going to be able to start claiming the credit when they file their 2024 taxes, $500 per year for 3 consecutive years. So the answer is yes, assuming the plan was set up here in 2024. Thank you for the good question. Do you have a calculator on your website that will help me calculate my solo 401k contributions based on different salary and wages and modified income scenarios to help with planning? Well, we definitely have a calculator on our website, and it's based on different business types. So let me link to that. If you go to mysolo401k.net under Learn and then click on Online Tools. Yes, so please continue to participate on our community, mysolo401k.net/my community. It's always free to join. All are welcome. We'll give it another minute to see if there's any final questions. No, it's an independent process. So it's not filed with your business or personal taxes. I'm just looking at those numbers. If the business is taxed as an S-corp or C-corp, technically the employer contribution is 25% of the W-2 wages. So technically they could go up to 25,000 as an employer contribution, but that would reduce by a corresponding amount the amount that could be made as an after-tax contribution. But you don't have to go up to 25,000. So what's described would be acceptable. You would need to have 3 accounts, because I'm assuming that employer contribution is going to be made as a pre-tax contribution. So you'd have a pre-tax for employee and or employer. You'd have an after-tax and then a Roth when you move the money from the after-tax to the Roth. Correct. All right. So I think that takes us to the end of the questions. Give it another moment here to see if there's any final to trickle in. Otherwise, thank you so much again for the participation. All right. Until next time, everyone. Take care now.